Thanks everyone for turning up. I know your time's valuable. And thanks for the consortium team for putting on such a great event. Hopefully I can live up to the billing. Now, I want to talk about a couple of things here. I'm going to talk about, firstly, what's happening in investment markets, because there's a lot going on, okay? So that'll have a little bit of a global theme, but I'm going to talk a little bit about Australia. I was interested in the farm values going up, because I kind of think that Australians are obsessed with house prices. Maybe they're going to be obsessed with farm prices as well, because it seems like they're doing quite well. Now, when it comes to the Australian economy, I think there's only two things that matter, right? There's only two things. The first is the housing market, really. There's a big thing which drives the Australian economy. And the second thing is China. And we'll talk about both of those. And I'll draw upon my experience at the Reserve Bank, which, where I started my career. But let me talk about some of the things that are driving markets. I won't go through all of this. I would say that global growth, so how much GDP is growing, I would say that Donald Trump's pretty good for growth, okay? Now, I'm not going to take a view on, whether we like the guy or not, but I would say that he's pro-growth, okay? And I think in the second half of this year, you're going to see that growth come through, okay? Now, if we go back, let's call it 2 months, when you had those Liberation Day tariffs and markets plummeted, we can talk about that in a moment, I think people were really worrying about growth, okay? Markets fell about 10% in US dollar terms. These are global markets. And I think people were really worried about growth. We weren't so worried about growth because there's two things which I think matter for the global growth, for the global economy, and we're confident on both of those. So I think the second half of this year is going to be more upbeat than the first half of this year. I think it'll still be volatile, okay, because I think Donald Trump loves to be in the headlines, but I kind of think that his bark's worse than his bite, to be honest, okay? Yep.
Can you just speak up a little bit?
Oh, okay. Is this not working? Okay, yeah. Yeah, sure thing. So I think Donald Trump, I don't think that he's really... Can you guys hear me at the back? Yep. I don't think that his bite's that bad. I think he makes a lot of noise, but I think this is really his negotiating style. We'll get onto that. Inflation, now I know inflation was a problem globally 2 to 3 years ago. I don't think it's so much of an issue these days, but I think it's going to pick up towards the end of the year. And what that means is when you get to interest rates, we know the Reserve Bank's been cutting rates because the housing market's kind of weak, so they basically just try to prop up the housing market, let's face it. Now, in America, people expect interest rates to go down, just like they expect more RBA interest rates cuts. I don't think they're going to cut in America. And the implication of that is that I think the Australian dollar is going to weaken against the US dollar. So if you're interested in offshore investments, you're interested in the Aussie dollar versus the US dollar, I think the Aussie dollar is going to weaken because I think the US is going to be hiking rates, increasing their interest rates, at the same time as we're cutting our interest rates. And what that does is it means the gap in the interest rate blows out, and that's bad for the Australian dollar. The Australian dollar will weaken. And I think that means you're going to see more overseas tourists in Australia, okay, taking advantage of the Australian dollar. In the same way that a lot of people were going to Japan over the past year because the yen was so weak, okay? It's the same thing. We're going to be on the other side of that. So interest rates, I would say in America, they're going up. The implication for us here in Australia, Aussie dollar going down, I would say. For global markets, it's a modest headwind, but I don't think it's going to be a big headwind, okay?
Question.
Yep.
The mortgages in Australia, you can't really compare them to mortgages in the US because they can have 40-year loans over there.
Yep.
Fixed at a fixed price.
Yep.
Where nothing like that happens in Australia.
Yep. Yeah, so it's really interesting because it's a 30-year mortgage in America, and you've got to remember, mortgage rates in America, if you go back about 3 years, you could get one for 2%, okay? Now, it's higher than that because interest rates have gone up, but no one is refinancing their mortgage in America right now, unless they have to, for that very reason. Because why would you? Your financial advisor would tell you you're crazy if you did that, right? Because you're going to reset yourself from a 2% mortgage rate to a 6% mortgage rate. No one does that. So in America, when interest rates go up, it has less of an economic impact vis-a-vis Australia, okay? In Australia, when interest rates go up, you feel it. You feel it, right? Because you know that everyone's starting to pay more on their mortgage. In America, what happens is that impact of higher interest rates takes a little bit longer to get through, okay? It takes a little bit longer, okay? So it's kind of different. But for the Australian dollar, the people that set the Australian dollar, which are basically people in big investment banks, like the place I used to work in, right? Those guys don't care about the mortgage rate. They're just looking at what's happening to the more or less the policy rate. Okay. Valuations, I'll get to this in a moment, but I think that stock valuations globally are kind of full. I wouldn't say they're expensive. I'd say they're full. And I'll show you a chart in a moment. When it comes to the geographies, and here, where is the place to invest money? What's going to grow? Okay, what's going to grow? For a long time, we've said that China's not really going to grow, and I'll tell you why. And most people, particularly in Victoria, if you'll be here in the the early 1990s, we saw that commercial property crash, right? Remember, there was a lot of overbuilding in Victoria, especially. It took a long time for the Victorian economy to recover from that. And the moral of the story is that when property, whether it's commercial property or it's residential property, when it goes down and it takes some of the banks out with it, I know we had some problems in Victoria with the banking system, okay? It takes a long time to recover from that, okay? You saw it here, you're gonna see it in China. So I wouldn't be looking at China for growth. I know that they're growing at around 5%, but that's nowhere near what they were growing at in the past 10 years or so. And by the way, if you speak to anyone who looks at the Chinese economic statistics, where they say, yeah, we did 5% growth, everyone will tell you that they're making the numbers up. Okay, so you just can't trust the numbers anyway. But anyway, I would say that the Chinese economy is not where you want to be. I would say the place where you want to be is America. Okay, and people ask me, well, why do you want to invest in America? Why don't you invest in Europe? And I'll tell you why. Because America has three things. It's got Silicon Valley, where you get all of these inventions coming out. Okay, and when there are inventions that come out, someone makes a lot of money. Okay, so you've got this pool of people who make a lot of inventions, okay? And that's really good for economic growth, and it's really good for those companies that are in that country, okay? That's why tech companies, and in America, we talk about them, because they're always innovating, right? They're making money. The second thing that America has is this thing called Wall Street, okay? So if you're inventing something, you need someone to back you, right? You need someone to finance you. You've got Wall Street in America. There's no counterpart in the rest of the world which does the same thing. And the third thing that America has, which I would say no one else really has to the same degree, are fantastic universities headlined by the Ivy League universities, okay? They've got a very, very good educational system. Why does that matter? Because they create smart people who go to Silicon Valley and then go to Wall Street. Now, that just means over a period of time that you always have all this innovation, right? And that is why you have a stronger growth rate in America than a lot of other places, okay? And until and unless you think that Wall Street's going to cease to exist, that the Ivy League universities are going to cease to exist, and you think that Silicon Valley is going to seek to exist, then you're always going to have these relatively strong growth rates in America, okay? So America's interesting from that perspective. When it comes to the market outlook, which is just here, I would say for global equities, global stocks, global stock market, I would say you're going to grind out a return this year of somewhere between 5 and 10%, which is a lot less than the 25% per annum that you saw last calendar year and also in the previous calendar year. Why? Because the thing that was driving markets so strongly last year and the year before is something called sentiment, okay? People were just willing to pay a little bit more for something, okay? Even though the intrinsic value of it hadn't really changed. They're just willing to pay a little bit more for it, okay? It's not a fundamental reason for stock prices to go up. It's just that people would like to pay more. Now, there's a word for this, which is fear and greed, okay? You'll hear a lot of people talk about fear and greed. You want to be greedy when people are fearful and vice versa. I would say that people, on average, in global equity markets, they're feeling pretty greedy, okay? So the sentiment's really high. And we look at and we measure sentiment, I would say it's as high as it ever gets, okay? So if you're looking for that to get even higher, to drive markets higher in turn, I don't think that's going to happen. But I think the fundamentals are okay. Corporate profitability in the US, the amount of dollars which people are making in profits is at an all-time high. It's a good spot to be at when you've got Silicon Valley and Wall Street behind you, okay? So I want to talk about valuations, but I'm going to talk about it with regards to this. So this is what happened to the MSCI World. The MSCI World is just like your ASX All Ordinaries, but for the globe, okay? That's kind of what it is. And when Liberation Day occurred on the 2nd of April, I remember this very well because I had to get up in front of about 300 people and explain where the world was going at lunchtime, so I didn't have much time to prepare. But the global equity prices really took it in the neck. They were about down 10%, a little bit more. And I got up on stage and I said to people, look, don't worry about Donald Trump, and we'll talk about this. Don't worry about Donald Trump, because there's one thing that Donald Trump does, and you should remember this from his first presidency, is that he negotiates really hard, right? And when he's doing that, the goal of him negotiating very hard is to try to scare people, okay? And when I see charts like this, share prices down 10% in about a week, globally, I'm telling you, people are scared. That's what happens when people are scared. I would say consumers are scared. Consumer confidence was going down. I'm not sure if you saw that in the paper. Business confidence was going down. People at businesses didn't want to invest because they didn't know what the landscape was going to look like. And I would say that diplomats were really scared as well. So people in Europe, I think, were terrified of Donald Trump. Is this guy going to pull out of NATO? What's he doing? Is he going to support Russia? What's going on? So I would say that this was a period of intense uncertainty. But look what happened. We're further above now than when we started, okay? So what's going on here? I would say that Donald Trump was just trying to scare people, right? But at the end of the day, what changed? Well, I would say that his bark is worse than his bite. Did he really want to destroy the Chinese economy? No. And I'll tell you why. Because what Donald Trump wants in life is, I don't know, to be liked, to be rich, to be successful, all this kind of stuff. And if his economy goes backwards, the American economy goes backwards, he's not getting rich, okay? No one's getting rich in that scenario. So this was really the scenario that I was painting when I got up on stage. I said, look, he's negotiating hard. He's actually trying to get share prices up, because we know that from his first administration. So don't worry about it. In fact, when this started and share prices were about here, on our measures, I would say that global equities, they were overvalued, right? Particularly in some parts of tech, okay, technology companies. But when it fell, the valuations went down a bit, and I would say they went to fair value, okay? They dropped 10%, but the fundamentals hadn't changed. So it was just 10% cheaper, right? So it went from overpriced to fair value. When we were here, I was hoping that it would keep going, so that it would keep going below this, the bottom of the TV. Why? Because our portfolio was defensively positioned, right? So we were calling this, and so we were outperforming. And if this share prices had got even cheaper, then equity valuations, instead of being fair, they would have been cheap. And what we do is when we see cheap stuff is we back the truck up and buy as much as possible, right? So we were hoping that he would keep going. But unfortunately he didn't, and of course we're now richer than ever, right? In terms of how much money there is out there, okay? Now, I think the reason why he capitulated, essentially, is because he was doing, I'm going to go through a few slides here, is that he was doing something called The Art of the Deal, okay? So this is the book he read, and this is the book everyone was reading when Donald Trump first became president of the United States, because I'm trying to figure out who this guy is and what's he going to do. Now, here's a ChatGPT summary. Maybe people at the back can't quite see this, but I'm just going to focus on one thing. ChatGPT summarised this in about 2 seconds. You could read the book in about 12 hours, your choice. But the last point of his negotiating style, which is in his own book, is, and I'll read it out, know when to push or to walk away, okay? By the way, all these other things, I think, what he was doing was more or less in line with how he was acting, right? So know when to push or to walk away. Now just think about what happened, okay? He was threatening China with massive tariffs, 140%. That was so high that no one was buying stuff from China. It was in effect a trade embargo, right? There was no trade because China's imports were priced out of America, okay? It was too expensive to do. So these ships were stopped floating across the Pacific from China to America. So they'd actually engaged in what I would call economic war, okay? They were actually not trading with each other, which is really bad for the global economy. And I think Donald Trump said, you know what? I thought these Chinese were going to give up and capitulate, but they're not. It looks like the economy's heading south and I'm not going to be rich. I'll capitulate, okay? And I think one of the most interesting things about Donald Trump, and in my view, what makes him like a good politician, let's put aside the, I don't want to get into a flame war about whether we like him or not, but just on whether he's a successful politician. By the way, he's been voted into presidency twice, so I think he's kind of successful. But I think he looked at this and he said, oh my gosh, I'm about to cause a recession which is really deep in America. I'm not going to be popular. I'll just pivot. And by the way, because Donald Trump's so famous for doing outlandish things, and of course, inside of the court and outside of the court, he gets away with it. This is almost the most brilliant thing about Donald Trump. He can threaten people, he can do all sorts of things, but for some reason he's the Teflon man, okay? Nothing sticks to him. So when he capitulated against China, he knew nothing was going to stick to him. So of course he just did it. Now, that was great for the global economy, right? That was great for the global economy. But I think what it tells you is that he's sensitive to the economic outlook, okay? And so I think one of the big themes that's going around in the world at the moment, which I'm sure you know of, is that the US and China are decoupling. They used to trade a lot. I think they're going to trade less. Everyone knows this, okay? But I'll tell you one thing that everyone is scared of. Donald Trump's scared of. Xi Jinping, who's the Chinese president, what are they both scared of? If they're decoupling, what are they scared of? What are they scared of? They're scared of this decoupling occurring too fast, okay? I always have this analogy. Let's just say you're driving from here to Melbourne and the speed limit's 100 kilometres an hour. Everyone in the car knows that you're driving to Melbourne. So the analogy is Xi Jinping knows that he's decoupling from America and the US knows that they're decoupling from China. So everyone knows this is happening, just like you know that you're driving to Melbourne. But let's just say the speed limit, yep.
Just a comment on that. Don't they both know they need each other?
Yeah, this is my point, right? They know they need each other.
Yeah,
but
they both owe a lot of money to each other.
Yeah, so they know they're going to decouple and they know they're reliant on each other at the moment. So if you're going to do that, you have to do it slowly, okay? If you do it quick, right, and if you drive from here to Melbourne quick, the probability that you have an accident skyrockets, okay? So you want to do these things slowly, okay? That's why you're starting to see semiconductor fabrication plants being built in America. This is why you're starting to see them decouple, but they're doing it slowly. If you do anything fast, something's going to happen bad, okay? So I don't think anyone, either side, saying, look, we don't want to do this or we shouldn't do this. They're both in agreement that we should do this the right way. So Donald Trump was threatening to do it in the wrong way, to do it quick. And the Chinese, I think, said, you know what? You're threatening to do something which you don't want. So I'll just sit here and wait for you to give in, which is exactly what happened. It's interesting the question or the comment that you made, they're reliant on each other. I would say that the Americans are reliant on China to fund the deficit, okay? This government deficit, the national debt. And essentially, if you think about it, if America's buying loads of stuff from China, right, then they have to give something to China in return. And it's money, but ultimately it's American assets, okay? That's ultimately what they're doing, whether it's farmland, whether it's US stocks, but in most cases, it's actually US bonds, treasuries, okay? If you're buying stuff, you've got to give something in return. And so they're financing the deficit. This is essentially what's happening. And there's a lot of debate at the moment whether the US can actually rely on China to finance the deficit, right? I think they can, and I'll tell you why. Because this $4 trillion that the Chinese government has in its foreign reserves, and you think about foreign reserves, it's basically just a piggy bank for the national government, okay? And that piggy bank, which is $4 trillion in China's case, which is really important, you put it in the safest place possible, okay? Right? This is what you do, because this is your national piggy bank, right? And so what's the safest place to put this stuff? Traditionally, it's been in US government bonds, okay? But are they riskier? Maybe slightly. I don't think so, but maybe slightly. But would you want to go and then put it into, I don't know, Japanese bonds? By the way, the Japanese population's going backwards, so maybe that's not so safe. European bonds, same issue. Okay, where are you going to put this stuff? You've got to put it somewhere. So you can't put it into gold. There's just not enough gold on the planet. Okay, so will the Chinese keep supporting America by financing the government debt? Right? I think there's no choice. There's no other place to put it. The numbers are just too big. It's really interesting. So when it comes to the outlook for markets, I think that I said before, there's two things that you've got to look at. And by the way, if you pick up a financial press, pick up the AFR, and they're talking about global economy or US economy, they're going to be talking about one of these two things, okay? Number one, will there be trade deals, okay? Right? And you'll see this all the time, argy-bargy with China. Is there a UK trade deal, an India trade deal, an Australian trade deal? You see this all the time. This is the big issue number one. And the reason it matters is because if there's no trade deals, then no one knows what as a business person, no one knows whether you should invest. If you do a trade deal, Donald Trump will say, if we do a trade deal with Australia, Donald Trump will go, okay, no more tariffs on you. You're free, basically. You can now start to invest with some confidence, okay? That's what the trade deal does. It opens up the growth outlook, okay, if this makes sense, right? And so that's why you need those trade deals. I think they're going to come. Why? Because people want to move on. And the Americans, to everyone else's unluckiness, they're the big dog in the world, okay? And if the big dog's saying, I want everyone to pay 10% tariff on imports, then unfortunately you've got to pay them. Now, there's some legal issues which Donald Trump's working through right now, but ultimately that's it. The US has more negotiating power than anyone else, so if they say we're going to tax you 10% with the tariff, unfortunately you're going to have to do it.
Why do you keep on saying they're going to tax us? It's the American people who actually pay the tax.
Yeah.
So they're not taxing us, they're taxing their own people.
Yeah. Yeah, so a tariff is a form of a tax, but a tax on imports as opposed to the people. The question here is, let's just say an iPhone comes into America from China and Donald Trump slaps on his 10% tariff, 100% tariff, 200% tariff, whatever it is, right? And then you go, okay, so who pays for that tariff, right? And at the port, right, the person that's importing it does that, right? Okay. And then the question is, do I pass that on to my customer? Okay. This is the really big question. If they pass it all on, then there's inflation. Okay. If they don't pass it on, then they get a lower margin and their profits go down. Okay. So at the end of the day, someone has to pay. And the question is whether it's a tax on the consumer or it's a tax on profits. Okay. So either the consumer pays more for the tax or the tariff, or the profits come down.
Importing country, they pay nothing. So sorry, the product they're selling is still at the same price. So that tariff is the American people paying one way or another.
Yeah, so I think it's
the importer or the absorbs it, or the American people pay it.
Yeah, so it depends on the way I think about it. If the tariff fee, if you want to think about it, gets passed on to the consumer, right? If the importer says, look, I have to pay an extra $100, but I'm just going to push up my price by $100, then that's unilaterally the consumer which is paying that, right? Unilaterally. But if the importer goes, you know what, it's really competitive, I'm not going to pass this on, then the importer eats that tariff. Essentially, they pay for it. Now, in that case, does that go to the consumer? Well, someone's paying for it. I would just say it goes to profits, okay? And by the way, that might be an international company, in which case it's the foreign owners who are essentially taking the profit hit, okay? This is how it works. I think ultimately it'll all go through to consumers, but not all at once, okay? So the trade deals are the first thing. Pick up the paper, you're going to hear about trade deals. The second thing is the US budget, okay? This is going through now, okay? It's passed the House of Reps, going through the Senate. It's a bit like the Australian budget in May, right? And everyone's sitting there going, oh, okay, what's going to happen? What's the government going to spend money on? And how much is it going to increase our taxes by? This is essentially what's happening, except in America, they're reducing taxes, all right? Lucky them. But ultimately, the reason why we care about this is because if they increase the deficits, just like in Australia, if they increase the deficits, they're basically pumping up growth, okay? They're borrowing to get growth now, right? And I would say there's going to be some small, what we call a fiscal stimulus. They're going to boost growth just by a little bit, which is good for growth overall. So for those two things, I think there's going to be trade deals, and I think there's going to be some government stimulus, essentially, through the budget. Both of those things are good for growth, and both of those things are good for inflation. So in the first half of this year, you had people worrying about growth, okay? Second half of the year, you're going to have people who are more upbeat about growth, okay? So what does that mean for global equity returns? In the first half of the year, I showed you the chart, they were a bit wobbly, okay, but they're a little bit higher than when they were pre this Liberation Day on 2 April. But I think in the second half of the year, I think it's going to be clearer sailing, because those sources of uncertainty which Donald Trump created, he's going to solve them, because ultimately he's trying to solve to higher wealth. I think this is what's going on, okay? When it comes to the Australian dollar, I mentioned that the US interest rates will probably go up because as growth goes up, interest rates tend to go up. In Australia, I would say interest rates are going to continue to go down, because in China, I mentioned that the Chinese economy and the economic outlook there is fairly challenged, okay? And let's face it, if you have borrowed the amount that the Chinese government has borrowed to kickstart your economy, okay, sooner or later you have to pay back those bills, okay? We know how this is how the world works, okay? And when you're paying back those bills, right, this China's economy, then they're not stimulating their economy, okay? They're hoping that that momentum which they pushed into the economy just keeps going, okay? Problem is, it's slowed already, okay? So there's a bit of a turbulence in the Chinese economy. So what does that mean? Okay, well, I don't think that the Chinese government is going to stimulate their economy like they did after the GFC. If you remember back to the GFC, the Chinese government stimulated their economy via the budget by 10% of GDP. So just add 10 percentage points to growth, okay? Which of course is a very, very large number. And that benefited Australia because when they did that and they were spending left, right and centre in China, they were spending that money on bridges to nowhere, roads to nowhere, empty apartment buildings, all this kind of stuff. And that stuff takes Australian steel and Australian coal because they were building coal plants as well. This time around, they're not going to do it. So even if you do see a Chinese stimulus, the government tries to kickstart growth, I don't think Australia's going to benefit, right? For that reason, because the Chinese government, our intel on the Chinese government is that they actually think they spent too much money during the GFC, okay? It caused all sorts of issues. So I don't think they're going to do that again. So if we're thinking about China saving Australia's bacon here, I'm not sure it's going to happen, okay? It's not sure it's going to happen. And when it comes to the other thing which drives the Australian economy, which is housing, okay? I know farmland's going up, but housing's a bigger asset in terms of total size in the Australian economy. The RBA is cutting. Why are they cutting? Because the housing industry is not doing that well, okay? Because they know China's not doing well, so they better pump up housing. This is just the way the world works in Australia, okay? So I look at it and I go, gosh, house prices, what's going to happen to house prices? I'm Australian. I was telling Flick, before I got to Horsham, as an Australian, I went on to realestate.com.au. I was checking out the real estate in Horsham, right? Because I'm just interested in this sort of stuff. But I can tell you what's going to happen to house prices. Everyone in Australia is obsessed with this stuff. What's going to happen with house prices? I'll tell you what's going to happen. So the RBA cut 25 basis points or a quarter of a percentage point the other day. Okay, you saw that? And they're trying to get house prices up and housing activity up. How much is house prices going to go up? I'll tell you how. I'll give you the calculation, give you the secret sauce. You already know this, by the way, but you'll be able to figure it out. So let's just say you're at an auction. I'll give you an analogy. Let's just say you're at an auction, and just before the auction starts, someone says, oh, by the way, the Reserve Bank just cut interest rates by 1%. What does everyone do? What do?
Bid up.
Go, bid up, and I can tell you how much, right? Everyone goes onto anz.com or cba.com or whatever, goes onto the calculator. You know the calculator which says how much you can borrow, and they put in the interest rate, which is 1 percentage point lower, and the amount you can borrow goes up by some amount, and they bid that much higher, right? And so you can actually, that's the formula. That's how much house prices will go up. You can figure it out on anz.com. But people do this themselves, right? So I'm not telling you something you don't already know, but that's how much Australian house price is going to go up, right? And the RBA is sitting there going, oh gosh, we need to get the Australian economy kick-started. I picked up the paper this morning and someone's predicting that house prices in Australia are going to go up 10%. It's exactly that calculation they've made, okay? It's exactly that calculation. So, you know, if you're, Rob, if you're sitting there going, what your client says how much the house prices go up, if interest rates go down 10% or 1%, that's the formula I would use.
But is that horse already bolted when people were at 2% and everyone geared up then? Like, is that horse bolted already, and people's ability to gear up further due to mortgage stress? Does that, has that already happened?
Yeah. So there's a couple of things going on. It's a good question for people online. Maybe didn't hear. Some people have 2% mortgages, lucky them. Okay, from the GFC. So will there actually be any benefit to the house prices if the RBA cuts rates? I think is the question, right? I would say yes, and the reason is the marginal buyer is not going to be the person on a 2% interest rate. The marginal buyer is going to be the first homeowner who's been scrimping and saving, desperate to get into the market, or a downsizer, or someone who's like coming in, repatriating from London and they're full of cash. It's these types of people, okay? So I think there will be that positive relationship between interest rates, because the market, unfortunately, the reason why house prices are low is because there's not enough stock, okay? So you don't actually need that many buyers, Okay, so those people, I agree that they're going to sit there and go, hey, yeah, why am I going to like pay, let's call it 5.5% instead of 2%? Sure, they might sit it out unless they have to buy a house. But I think there's a lot of people who sit there and go, you know what, housing market turnover is like 2% a year. Okay, it's like 2% of houses, something like this sells each year. I think there's more than 2% of people that want to buy, right? I think this is the way it's going to happen. So I do think it's going to work. I do think it's going to work. So that's what I think is going to happen to Australian house prices, which we're all kind of obsessed by. When it comes to our portfolio and what we're thinking, I'll talk about a couple of things. Some of the bigger issues. So when we're thinking about our portfolio, we're trying to get the 9% per year over the medium to long term. We're trying to find stuff, and I'll be very technical here, we're trying to find stuff that's going up, okay? You don't want stuff that's going down. Who wants stuff that's going down? So the way we think about it is to go, okay, let's try and find some sort of industry trend, something that's like changing fast, okay? Something that's growing faster than GDP. If you're thinking of something that's growing at GDP, you're going to get market-like returns. If you find something that's growing faster than GDP, you're probably going to get more than market returns, okay? So you're trying to find those things. And so the things that we look for over the medium to long term, we call these structural growth thematics, or structural growth just means it's something that's going to grow for an extended period of time. It's a structural change, okay? And the thing about structural changes, these long-term growth trends, is that they don't change very much, because by their very definition, they last a long time. So these structural growth trends, that means you actually don't have to look very hard to find them. Now, I can tell you something that's growing at 30% a year, okay? 30% a year, insane, right? Insane, 30%. Who's growing at 30%? Cloud providers, okay? So when people talk about ChatGPT and you type in something into ChatGPT and it comes back with an answer, it does those calculations in a data center, a big building that's full of computers basically, and that thing's called the cloud, okay? The amount of calculations that data center's doing, essentially, is going up by 30% a year, okay? This is AI, but it's also the fact that a lot of stuff which happens on your computer happens in the cloud now. So I'm old enough to remember, and some people here might remember as well, when you were installing Microsoft Excel and Windows on your computer with the disks. You remember this? You'd put them in, and you'd have like 12 of these things, and you'd keep like installing. That's because the computer program was sitting on your computer. Nowadays, you don't do that because the computer program is sitting in the cloud. It's actually, that computing is not in your computer, it's actually in some data center, outside Melbourne, this kind of thing. But the amount of work, the amount of calculations, the amount of activity in those data centers, going up 30% a year. Okay, who is creating this stuff? Who's benefiting from this stuff? Because 30% a year is like a good number, right? It's a good number. Microsoft, okay? It has these things. Amazon. Now, most people think of Amazon as the place you go shopping. It makes more of its money from these things called data centers, okay? The ChatGPT, things that power ChatGPT. Alphabet, which owns Google, it is also big in this. So this is the kind of thing which is really interesting to us. And by the way, when people talk about AI, this is the thing which is powering those types of stories. And when we think about AI and computing, we're thinking about what the next big thing is, okay? Because at the moment, people use AI for things like Copilot on Microsoft, but also ChatGPT on your phone. And I look at this, and some people here will know what I'm talking about. I look at this as the very first, or similar to the very first computer games, and there was this game called Pong. I don't know if anyone remembers this computer game called Pong. Basically, it was a black screen with two paddles which did this and a ball, and so you had to hit the ball back, you'd move the paddle, and it was basically like a dot and two rectangles. That was the game, okay? And you look at computer games these days, it's nowhere it's amazing, right? You have 3D games, it's incredible. And so AI, when you think about ChatGPT and you go, oh wow, it can have a conversation with me, just imagine what it's going to be doing in the future. Now, when it comes to these big data centers, which are producing all of this computing power, in the short term, they've got to figure out what that next AI product is. Because ChatGPT is fun, but if you can get, I don't know, I give the example of, let's just say you have a Netflix account, and Netflix says, by the way, we know, because we're linked into we've got the data from Instagram, we know that you like, and we're going to make this up, we know that you like Western movies, we know that you like musicals, and we know that you like, I'm going to make this up, Tom Cruise, okay? So guess what it gives you? It gives you a musical that's a Western with Tom Cruise. And it does this automatically, and it's completely tailored for you. But I think that the entertainment industry, which is always at the forefront of technological implementation, okay? Let's just say you're wearing these goggles. You know these goggles that are virtual reality, okay? Let's just say that you're wearing these things, okay? And you're watching this movie. And the interesting thing about these goggles, they track your eyes, okay? If you wear these things, they track your eyes. And let's just say you're watching this Tom Cruise Western musical and it sees that you're looking over here because, I don't know, there's some bad guy or something, I don't know, that you find interesting. On the fly, it'll make that character a bigger character, right? I think this is where this is going, right? And I don't think it's a stretch to think that you're going to have completely tailored entertainment in real time. I think that this is actually closer than you think. And you go, okay, so that's where the world's going. How do you make money out of it? Well, if you think about that, the amount of computing that's required for that, when there's, I don't know, let's call it 500 million people watching this thing at the same time, because everyone's got their own individualised movie, that's huge. And it's like multitudes higher than the amount of compute that's occurring right now, which means that companies like Amazon, Microsoft, and Alphabet are going to see that 30% growth rate last for a very long time. So that's the kind of stuff that we're interested in. And I think you need to look forward as investors to these things which are changing, as opposed to look backwards and go, oh, you know, what happened in the past? You know, if you do that, you're not going to make any money, okay? You guys will get dartboard. So I think this technological advance, it's really interesting, it's super interesting, and I think that it's actually going to happen soon. I want to talk a little bit about, how much time have I got here? A little bit long?
What's the time, Alan?
6:35. 25.
Yeah,
Keep
okay,
rolling,
keep going.
keep
Okay.
rolling.
I want to talk a little bit about some of the big risks that we see in the global economy, okay? So you've got Donald Trump there. I don't think that he's going to start another trade war with China. Why? Because he didn't win the last one, okay? He was the one that backed down. So I don't think he's going to do it again. If he did, and I'm wrong, and markets go down, I think you've got to lean into it. I honestly think you've got to lean into it, because you know that he's not trying to break the global economy. In fact, he's just trying to get something done, and he wants stock prices to eventually go up. Now, do you remember, I think people here probably saw this video, so when he backtracked and he gave that 90-day extension on the tariffs, there was this video of him, I think it was in the Oval Office, and he was laughing, and he said, all these people around, he goes, that person there made $500 million in the past week. This person here made $200 million. He's such a good-looking guy. He's so good. He's so smart. You know, he says things like this. And you go, is that what you were solving to? Is this really what you were trying to do? The answer, maybe. Maybe. I don't know. He's making his friends rich. But there's an additional anecdote I would leave you with Donald Trump. Is you go, okay, you remember TikTok? I know we're on TikTok right now, so I'll tell you about this example. He wanted to ban TikTok in America. Okay, you remember this. He wanted to ban it, right? All of a sudden, he says, no, I don't want to ban it in America. What's changed? Well, here's the mathematics behind this, which explains Donald Trump. If you ban TikTok in America, this business, which is worth, pick a number, $100 billion, what happens to its value if it's banned in America? It's down. Let's say it's worth $20 billion. So you've just lost $80 billion. $80 billion of wealth has just been evaporated. Now, sure, that's Chinese wealth and he doesn't really care, but it's $80 billion worth of stuff and money that's just gone down the tube. It's gone. If instead of banning TikTok in America, he says you've got to sell it to an American, what happens? Some American buys it at less than what it's worth, right? Because they have to sell it at less than 100 billion, which is what it's worth. Because otherwise, if no one buys it, it gets banned, okay? So he's basically saying, can some American buy this thing that's worth $100 billion for, let's pick a number, $50 billion? And then all of a sudden, they'll mark it in their balance sheet, in their P&L, or profit and loss, they'll mark it in there as worth $100 billion. So all of a sudden, one of his friends is now $50 billion richer. Okay, that's exactly the same thing as what was happening in the Oval Office that day. Okay, I think this is exactly the way he's thinking. He's a businessman. Okay, and he's thinking, why would you leave money on the table? Let me give you another example. Ukraine. All of a sudden, the Americans say under Donald Trump, by the way, yeah, we won't support you unless you give us those mineral resources. Okay. Let's just use the same framework. Okay, same framework. If America doesn't take them, right, Donald Trump and his friends don't take them, right, then Ukraine gets to keep them, and then the Americans have to buy it off them, okay? If somehow Russia takes them, then America, if they want them, they've got to buy them off the Russians. So why not get Ukraine to give them to you, right? Again, this is just a transaction, it's a deal, okay? It's the art of the deal. So I think a lot of what you're thinking about with Donald Trump is actually transactional and for money. Sorry, was the question?
I was just saying, those minerals, which are talking rare earth minerals, they're all on the occupied part of Ukraine, they are.
Yep.
So basically they've got a deal with Russia one way or another to, this deal they've made with Ukraine,
Yep.
it's worthless unless they can get that land back, which Russia now controls.
Yeah, so the Ukrainians, let's play this out. If Ukraine's sitting there going, okay, there's this stuff which, you know, in the ground, but it's occupied by the Russians, they're probably more likely to sign it over, right? Because I think that they kind of know that it's very difficult for them to get it back, okay? And they go, sure, we'll sign that over because I probably weren't going to get it anyway, okay? But then it's up to the Americans to negotiate with the Russians and say, by the way, that stuff which the Ukrainians said we could have, which is, you know, your tanks are sitting on, basically, can we have access to it? And of course they say, yeah, no, you can't have it unless you pay us some money. So then it just becomes a negotiation, right? So yeah, I take your point, I agree with it, but it just goes to another negotiation and deal.
Yeah, basically it was a worthless deal at this point in time because Ukraine gave away rights to something they don't physically have at the moment.
Sure. But I would say that that's something for America. That's still something. You can say it's hard for them to get to it and they might have to pay a fee to the Russians, but it's still something. Okay, I still say it's still something. It's better than nothing, which is kind of my point. Okay. So look, I think that what's happening with Donald Trump, if you see some turbulence in markets, I would lean into it. Now, I think Donald Trump had his pants pulled down by the Chinese, right? I think he lost, and I think he's going to pivot. And this is the great thing about Donald Trump, what he's very good at, okay? The great thing from a political perspective is he is very good at pivoting to something else and then talking about it very loudly, and then people get distracted and they forget about the thing he lost, okay? I think this is actually a political skill. So I sit here with my team and I go, okay, what's he going to talk about? He can't talk about tariffs in China now because he lost. Now what's he going to talk about? Because I'm thinking if it's something that he's going to talk about which is going to impact global share markets, I want to get ahead of it, right? I want to get ahead of that. If it's something he's going to talk about which does impact global share markets, then it doesn't impact me, right? So I think there's two things he's going to talk about, right? He's going to have to pivot. Number one, immigration. And I think he's going to talk about it because in America it's a hot button issue, right? It's going to be all over the TV. So I'm pretty sure if he needs a distraction, it's a pretty good distraction, right? And he's got form on this one. So I think he'll talk about immigration. Does that matter for global markets? Not as much as a global trade war, okay? So that's something which, from an economic perspective, is less important. The other thing I think he's going to talk about, he's going to go, hey, Jerome Powell, chair of the Federal Reserve, I'm going to fire you. I'm going to fire you, mate, because you're not cutting interest rates. Because I don't think the Fed is going to cut interest rates. People think they're going to cut them. I don't think they're going to cut them. And I think this is going to cause, potentially, if it gets out into the media and he tries to really distract people and really talk about it a lot, because he has talked about this before, right? He has talked about it before. Global markets will go down. We know that. But is he actually going to fire the chair of the Federal Reserve? No chance. No chance.
Just a comment on that. A lot of the stuff he comes out with, I don't believe that's what his plan is. It's what happens after.
Yes.
Is what his plan really is.
Yes.
In other words, come out with something that looks pretty not feasible, but that pushes those people in to discuss, and then what ends up out of the second round is the real plan.
Yeah, so I agree. I don't think that he actually wants to sack Jay Powell. Okay, so the comment was, is he really want to do this? I don't think he really wants to do it. I think he's doing the same thing, which is trying to scare people, right? But what does he want? I think he wants a reason to put in someone else who will cut rates, okay? Because Jerome Powell's term is up in about 18 months, okay, a year to 18 months. So he's just laying the groundwork for people to expect the next person to be less independent. I think this is ultimately what he wants. Because I think he knows that he can't do it, sack Jay Powell, and he doesn't have the power to set interest rates himself, but he can certainly make Jay Powell look bad. And remember, this is a popularity contest in America. If Donald Trump is the person that most people listen to, because he's the loudest and he's the president, okay, he has a unique ability to make people look bad, right? Now, whether it's fair or not, good question, right? I think we know the answer, but the victim's still the victim, okay? I think that he doesn't really care, right? I think this is what's going on. But let's just say he starts attacking Jay Powell and says, mate, I'm going to sack you. I don't think he's actually trying to do it. Markets will sell off. 100% they'll sell off because he'll ramp the rhetoric on this to a very high level. I would lean into that. I would 100% lean into that because he can't. He can't. The only thing he can do is to put someone in to replace him when his term expires who's more likely to cut rates. But are they likely to aggressively cut rates like Donald Trump says? No. No way. Because if you get that person in, right? I'm sorry, they would never get in because they go through a vetting process, and if they're too radical, they won't get through. Okay, they won't get through the Senate. Okay, so they won't get through. So, what's he trying to do? I think part of it's a distraction, but part of it is trying to make people look bad because I think he actually thinks he can, but he won't be able to put his person in. So I would expect that. I would lean into that one. I would lean into further China weakness if you see it, but I don't think that's going to happen. I don't think there's much else he can do. Okay. I think that one of the big things that we're thinking about right now is Europe, okay? Now, I'll tell you a story, quick one about Europe. Europeans don't like spending money on defence, okay? Remember there's this NATO thing, you've got to spend 2% of GDP on defence. In some countries, particularly when you move further west in Europe, they don't spend much money on this. So what do? What does Donald Trump do? He says, well, I'm going to pull out of NATO and you've got to deal with Ukraine yourself, okay? Because by the way, I want all those planes and tanks. I want them pointing at China, not Russia. Because by the way, I kind of like Vladimir Putin. That's kind of what he's thinking, right? And so the Europeans are sitting there going, gosh, if you're not going to protect us, then I guess we have to put out.
But that's the second plan, you see.
Yeah, I think that's what he's trying to do. He's going to say, by the way, you spend it on yourself. Because if you're going to spend money on defence, guess who sells a lot of that stuff? Me, right? So I think there's a bit of an export story here. Now, what that means is that the European economy is going to do okay because all of a sudden you've got the government spending loads of money. You saw this during COVID. You saw that, the government threw heaps of money in the economies and around the world, and they went haywire. They went bananas. I think you're starting to see the same thing in Europe. But by the way, I think it's all priced in. It's 100% priced in. We've had a big rally in European stocks and companies versus America. But I think this phenomenon, this improved growth and profitability in Europe versus America is more or less priced in. Where we're at now, America looks the most interesting to us. So just some final wrap-up comments for the portfolio. Maybe it's informative. I think some people here hold this portfolio. Maybe it's interesting from your own portfolio perspective. Where our risk appetite is at the moment, it's full. And what I mean by full is we can take in the Magellan Global Fund up to 80% of market risk. And we can go below that if we're a little bit worried, but we can't go above 8% of market risk. So we're always taking less risk than the market in our portfolio, which is good, right? Because you get loss volatility. We're at 80. We're at that 80, okay? So we're full risk. There are some things we like, some things we don't like. What do we like? Some parts of tech, okay? Some parts of tech. Not all of it, but some parts. What don't we like? We don't like China. I think that thing, not only is the economy not fantastic, but I'm pretty sure that the government is going to have its hand in the profit till, so to speak. I think we've seen that. I think it continues. I would say that there are some parts of the what we call the more defensive type companies, which are really interesting. In particular, companies which make food manufacturers, some quick service restaurants. I know there's Guzman Gomez in Australia, but we have the ones in America. in particular the one which GYG is trying to copy, called Chipotle. These types of companies, I think, are going to benefit from some of these structural trends. America getting healthier, I know it sounds crazy, but I think they are getting healthier. I think China's not doing so well, so you want to be in America. I think you want to be leveraged to AI, because it's grown at 30% a year, or at least computer's grown at 30% a year. And I'm pretty sure it's not going to slow anytime soon. It's not going to go up in a straight line, but I'm pretty sure that the world is becoming a more productive place, not a less productive place, okay? And productivity equals profits, equals share prices, equals share returns. So I'm like quite happy with that arrangement. So with that, I might leave it there. I've spoken for a long time. Thanks again for the invite. It's great to be here. So I don't know if anyone got questions, I'm happy to take them now or afterwards. Yep.
My mind was thinking about US and China and what's in the background, what's going on as well. And it does connect to Australia as well,
Yep.
is defence.
Mm-hmm.
You've got that idiot in North Korea
Yep.
who is sitting in, he's sending troops to Russia
Yep.
to die in Ukraine.
Yep.
You got him sitting in Xi Jinping or whatever his name is, and they're threatening. We can't do without US security. That's why we've got Pine Gap and places like that.
Yep.
Is there a consideration of investing more in defence type shares or investments? You know what I mean?
Yeah, I get it.
Because I think our security is
Zero.
shocking at present.
Yeah, we rely on the Americans. I agree with that. So the question is, should we invest in defence companies, and is defence interesting from an investment perspective more generally? I would say that on the second question, is the defence industry interesting more generally to investors as a whole? I would say yeah, because look, the world's getting closer to friction, okay? And in that scenario, you want to buy more tanks, which is exactly what the Europeans are doing. It's exactly what they're doing. Okay. Now, for us specifically, we don't invest in the defence industry. We also don't invest in tobacco and some high roller casinos, this type of thing. From a social perspective. But if we didn't have that constraint, we'll just talk more generally. So I'm giving a broader view, not a Magellan view here. I would say that there are winds of change here, and the world's becoming more dangerous, not less dangerous. Mm-hmm. So from an Australian perspective, which is my personal view, I think, we need to maintain a strong US relationship. It goes back to World War II. Who saved our bacon in World War II? Okay, it was the Americans. Okay, you mentioned Pine Gap, and that's why we have Pine Gap. Pine Gap's American. I would say the Americans need us, because Pine Gap's an American installation. Because essentially what they do is they have these like Pine Gap type things around the globe, because they each cover a part of the globe, and Australia gives coverage for our region of the globe. They kind of need us as much as we need them. So I'm not so sure, again, it's just my personal opinion, I'm not so sure that our defence relationship with America is going to be under as much pressure as the diplomatic relationship, okay? Because I think the Pentagon and the Australian Defence Department in Russell and Canberra are actually quite friendly towards each other.
They're what, sorry?
Quite friendly towards each other. Mm. Yeah. Fundamentally, putting aside the politics.